My favorite comment is gold hasn't done anything.
Yeah.
Well, it has outperformed the S&P since 2000, I think, right? I'm not a chart technician, but I've been told that, and I do believe it. Like, look where we traded from $350 to now $2,700. You do the math, how many percent that is. Gold has performed. Just keep in mind, it is a passive investment. It doesn't give you a dividend or anything, so maybe not passive by dividend standards, but it's not. It doesn't yield anything. That's the term I was looking for. It doesn't yield anything, right? So that's why maybe it's boring, because you can't do anything with it. You can't use it to buy, a loaf of bread at the bakery. But it's protecting you from the decline of the U.S. dollar by actually appreciating against the U.S. dollar, which we're seeing right now. The U.S. dollar is hanging in there. The Dixie's at 100, and there are other factors as well. We're in a rate cutting cycle. Like Jerome Powell already said, we're at least going to cut another 50 basis points. Honestly, I don't think a lot of that is already priced in. So there is room to go. And $3,000 is, I wouldn't call it a price target. It's probably the minimum we're going to be looking at here if momentum continues. And that doesn't even weigh in any of the geopolitical situations that we see around the globe.
Hey guys, my name is Danny. I'm a data scientist, and you're watching Capital Cosm. Today, I'm thrilled to have Kai Hoffman from Soar Financially, the Soar Financially YouTube channel. Kai, thank you so much for coming on.
Danny, really appreciate the invitation. It's a pleasure to be here. Thank you.
Yeah, for sure. Well, hey guys, before we get started, I'd like to remind you, if you're getting value out of these videos, to hit that like button, hit that subscribe button to keep seeing more content like this, as well as to check out our Substack, capitalcosm.substack.com. The link to that will be down in the description box, as well as the pinned comments down below. So for an exclusive section of this interview that you won't see here on YouTube, as well as a number of other perks, check out the link, see what we got to offer. If you like it, you can sign up. If you don't, it's perfectly fine too. All right, Kai. Well, let's just dive right in. I'm a big fan of your YouTube channel, so I'm glad to have you on. For those who may be coming across you for the first time, if you would run us through who Kai Hoffman is, what is kind of like your origin story? What got you into, the mining sector, the energy sector, commodities, interviewing all of these experts, much the same way that I do? What got you to this point?
Yeah, no, appreciate it, Danny. Thanks for the opportunity here. I bought my first mining stock, I think, in 2003, 2004. It was a tungsten stock, actually, because my university professor back in the day went on a site visit to a tungsten project in Canada, just in the Yukon, just on that Northwest Territory border. I think it was Kantong back in the day. So it's really interesting to see stuff and projects come full circle, because now that company or part of that project, Mactung, is in Fireweed Metals, which I own quite a few shares in. But it's interesting how everything sort of gets recycled in our industry. Started Soar Financial back in 2011. Background as a PR firm, like we were on a conference out of Germany, but also the Soar Financially channel back in March 2020. We set that up. Like everybody else, it was COVID, and we tried to engage with our clients back in the day. So that was the sort of the origin story there, because I wanted to look you as my client in the eye when I interviewed them, because I couldn't meet them in person, right? Because for me, in-person meetings and meeting with CEOs is extremely important, because you can filter out quite a lot of bullshit, quite honestly. Pardon my French here, but you can. Right? It's just reading body language, but it still doesn't work as well over Zoom. Don't get me wrong. We try to imitate. It doesn't work 100%, but it gives you a bit of an idea, right? And we also want to show that the clients don't sit at some beach sipping Mai Tais while the world is going to hell in a handbasket, right? That's sort of a channel sort of evolved from there. Did a lot of CEO interviews, and then started doing a lot of more macro interviews, because we try to understand what is moving markets. Why is the mining market potentially not moving? What are the reasons for that? And it's been really, really interesting, because we've done a lot of fantastic interviews with some guests, and really trying to work out, okay, risk capital is not there, but it's coming back. So the mining market is going to be an interesting one to watch over the next few years, and I think we're at the forefront of it. I hope, at least.
Yeah, totally. What the advantage is that you people like you and I have is that we kind of become aggregators of knowledge. We interview all of these experts and so forth. So I want to get your take on having talked to all of these the best minds in the mining space and in the commodity space, and in who research these topics of the markets and the economy and so forth. What is your general view of the markets right now, as well as the economy? If you want to take those separately or in tandem, it's up to you. But how do you see things playing out right now from a very broad perspective?
Yeah, I think they are actually two topics, and I have to admit, like sometimes I throw in the question in my interviews as well, and we mix the topics, but you got to look at them very differently because the market is telling you a very different story than the underlying economy, right? The market is where we're trading at the S&P 500. I keep looking at that as a benchmark, 5,700 points, over 5,700 points, near all-time highs or at all-time high levels, while the economy itself doesn't feel like in a boom phase. Unemployment is rising. It's just reading the comments below my videos, like people are hurting, and that's a very different story than what we see in the market. You got to take that separately. Where we headed, I think the market is extremely nervous. Yes, it is still running. There's money still piling in, but we've seen it in early August. The market wants to correct because the problem is like too much money in one sector, in one area or one asset class. Everybody tries to get out of it at the same time. We've seen that, let's call it a flash crash or Black Monday of August 5th, where the market just dropped a few hundred points all of a sudden. And that might have been, what do you call it, a foreshadowing of what might be to come if we get some very negative economic data. Maybe the Q3 earnings report disappoints. Honestly, I have no idea what that trigger will be. Back in August, it was the reversal of the yen carry trade because the Japanese central bank said, "Well, we're going to raise interest rates," and maybe some algos got nervous and tried to get off out of that trade. So we've seen that market come down, but that could happen again and in a much worse way. And another great example that everybody probably has top of their mind is March 2020. Even gold and the mining stocks, the commodities, they all crashed. It was a run for liquidity. Everybody brought in, sold everything they could, at least for a few days before reevaluating the situation. And I see that nervousness. And the second something really negative happens that and the floodgates open, we'll see that again.
Yeah. So, is there like a telltale sign that you see out there that could point you in either direction? Like, say in 2023, you saw a lot of negative sentiment. Everyone was calling for a recession. Now you could say, oh well, by definition, the classical definition of a recession, we did have one, but we didn't see the recession materialize in the way that people were anticipating, because people were all on one side of the boat. Now, fast forward to late 2024. What are some telltale signs out there that can kind of help investors anticipate what comes next?
That's a very good question. I honestly don't have a straight answer for you, Danny, because there's so much noise out there, and we really don't know what could set it off. It could be a rising unemployment rate. Maybe we'll see a five handle at some point. Maybe the Fed will cut at a faster rate than we all expect. Right now, it's priced in that we will see another 50 basis point cut at the next meeting here in about 43 days, right after the U.S. election. Maybe the U.S. election is the tipping point. Maybe somebody gets elected that nobody wants, and we'll see riots in the streets, a civil war, like there's been mentioning of that. Like, God forbid that happens, right? But there are a lot of factors, and it's really difficult to pinpoint. It could be maybe that a bond sale doesn't go through, then the bond investors get nervous, which is really, really big market in itself. I think Simon Hunt phrased the term that the bond market is the root of all evil, right? So if that happens, then of course the doo-doo is going to hit the fan as well. So it's really tough to pinpoint. You can pretty much find a statistic that fits your narrative for anything you say, to the positive as well. We don't always have to talk about the negatives, but I'm sure you'll find a statistic. Maybe the first rate cut changes the rate of unemployment, and it actually comes down at the next reading. Personally, I doubt that, but those surprises could also happen, right? It sounds like I'm wishy-washy and I don't have a clear opinion, but I've been doing a lot of interviews with a lot of different guests. Everybody has a bit of a different opinion, and nobody knows. Quite honestly, yes, everybody's in their camp and everybody believes in, of course, their story. But since you've asked me sort of as the news aggregator in the middle, I have no clue. Like, I really don't. Like, of course, my gut tells me that we're in for a soft to very hard landing. What that looks like, I can't tell you, quite honestly. Like, it sounds really wishy-washy, and I hate to be wishy-washy like that, but it could be any single factor, right?
Yeah, be wary of someone who claims to know it all. That's something I always keep in the back of my mind. We for the investor out there, despite crisis, despite the conditions of the economy, the conditions of the market, there's always opportunities out there. Where do you see the greatest opportunity out there for those who who may not fall into the doom and gloom? Because I see this all the time. There is some doom and gloom in my videos. I can only speak for myself, but there's all by that same token, there's also still opportunity out there. So for those who are trying to pinpoint where that is, where do you see that?
Oh, absolutely. I think commodities is a big focus of what we do. That's where we come from, and I'm finally allowed to say, and I finally can say it. There's a lot of room for growth and a lot of room for positive returns in the commodity space, in particular precious metals. Gold is trading at an all-time high. Silver is lagging behind. Silver is a big, big opportunity for investors. We're trading barely around the $32 mark. Technical analysts tell me that 32.50. Once that number falls, there's a lot of room for upside momentum. All-time high was at $50, so keep that in mind. There's still room to grow at least to $50. But if silver behaves anything like gold, then we'll definitely overshoot that target. And people have mentioned $100. Like, I'm not that optimistic, but then again, I probably have to eat my words in 12 months, and we'll probably see triple digits, right? There's a bit of caution there in there as well, but quite honestly, we've been laughing at a $3,000 gold price target. I just interviewed somebody from Saxo Bank, and his price target is $3,000. Citibank's price target is $3,000, but 12 months ago, I would have laughed them out of the room. You should have read the comment. You should read the comments down below those videos, right? So I think there's a lot of room for growth. Silver, gold, I like, and then of course the underlying stocks. Like, depends on your risk or on the risk tolerance. I see a lot of opportunity on the underlying stocks. Major miners have started moving. We've seen an IM Gold move 100%, but that's nothing in comparison. Gold is up 26, 27% year to date, and the miners are barely at 30% on average, right? If you look at the GDX or GDXJ, which are some of the mining ETFs, they're at 30%. They should be outperforming 3 to 1 the gold price, and we're not seeing that at all yet. So that means there's still a lot of room for growth in the mining stocks. You can choose your poison. Buy an ETF is probably the easiest if you don't have any in-depth knowledge about the space. It's a bit of the lazy way of investing, I call it, and personally, it's not my preferred way because I work with a lot of smaller junior companies, and they desperately still need capital to develop their projects, to invest in their mines. But there's a lot of torque left in those companies. And we're just slowly starting to see the traction come in. There's a bit of volume uptick, but we're far from euphoria. Don't get me wrong. I was just at a mining conference 10, 12 days ago. While I sound quite optimistic here, people were happy. There was no problem. Nobody really complained about the markets. I called it the acceptance stage of grief. It's like usually the final stage, but nobody was euphoric. Nobody was said, yes, we're going to do this. Our stock's going to quadruple over the next 2 weeks here. I haven't heard any of that. But I haven't heard any negative comments either, which I've heard a lot of the last 12, 30, or 36 months, right? So it's been a miserable time. And I think that has me quite optimistic. And if investors want to play that game, just go play the ETFs and siphon some returns there.
I don't know if you see this in your comment section, but anytime I have like an expert that's like super bullish on gold with like some some big prediction out there, there's always comments that are just like, oh, well, this person's been saying gold's going to go to the moon for so long. And it's like, you do realize we've been making new all-time highs for like a year now. So it's like gold is going to, like, and you brought up this point 12 months ago. $2,700 gold was, it was pie in the sky. You'd write it in thumbnail. You'd hear people talk about, $2,500 gold, $2,700 gold, but you couldn't really crystallize it as any tangible thing that we would actually get to. It was kind of like out in the ether. But now it's right here staring us in the face, and you still have people in the comment section. They're like, oh, well, this person, there's still this doubt. There isn't this euphoria yet, despite the healthy move in the gold price. Do you see that as well?
Oh, absolutely. And my favorite comment is gold hasn't done anything.
Yeah.
Well, it has outperformed the S&P since 2000, I think, right? I'm not a chart technician, but I've been told that, and I do believe it. Like, look where we traded from $350 to now $2,700. You do the math, how many percent that is. Gold has performed. Just keep in mind, it is a passive investment. It doesn't give you a dividend or anything, so maybe not passive by dividend standards, but it's not. It doesn't yield anything. That's the term I was looking for. It doesn't yield anything, right? So that's why maybe it's boring, because you can't do anything with it. You can't use it to buy, a loaf of bread at the bakery. But it's protecting you from the decline of the US dollar by actually appreciating against the US dollar, which we're seeing right now. US dollar is hanging in there. The Dixie's at 100. And there are other factors as well. We're in a rate cutting cycle. Like Jerome Powell already said, we're at least going to cut another 50 basis points. honestly, I don't think a lot of that is already priced in. So there is room to go. Like, and $3,000 is, I wouldn't call it a price target. This is probably the minimum we're going to be looking at here if momentum continues. And that doesn't even weigh in any of the geopolitical situations that we see around the globe. Middle East obviously dominating the headlines here, but I don't think that is priced in yet. Right. So there's a lot of momentum for gold. And people tell me, he's like, gold hasn't done anything for me. He's like, you probably don't own any, or I'm not sure what your investment objective was. If you're trying to generate and trade it, of course, you got to pay premiums on bullion and all those things. But then maybe you're looking at it the wrong way personally. Like, and those comments always make me at least chuckle a little bit.
Yeah, yeah. You could possibly make a case for silver. Silver is still doing fairly well. It's up on a similar percentage basis year to date relative to gold, but it's still about 40% off its all-time high. When should we anticipate silver to catch up to the gold move, do you think? Because typically when you're in these precious metals bull markets, silver begins to outperform gold. That's a sign that you are in one of these. Well, we are in a gold bull market for sure, but in a overall precious metals bull market, when silver outperforms gold, when should we anticipate that?
Your viewers are going to hate me in the comments down below. Please don't. But I think silver is trading in like an industrial metal right now. If you look at the copper chart, if you look at the silver chart, and you put them over on top of each other, they're almost identical. And the second we break out of that tandem trade, whatever you want to compare trade, pair trade, we will do much better. And I think silver is poised to do that at some point. It is lagging behind gold a little bit. The gold silver ratio is at 85. Even if we just correct down to 75, and let's assume we see a $3,000 price target, silver should go to $40. And we always know silver price overshoots those targets. It just too much enthusiasm in the silver price because there are a lot of enthusiastic silver investors in there. But we need to decouple from it first. What we've seen in the last few days, I think, has quite a bit to do with the China stimulus. And there's quite a bit of volatility in the silver price as well. So we've seen a 5% move just the day before we hit the record button here. And that's a big move for a precious metal, in my opinion. Not uncommon for silver, but it's still a big move. And that's where we'll see moving forward. And once we break out of that cycle, silver will quickly catch up. We'll probably get down to that 75, 70, maybe even down lower gold silver ratio. I just hope gold doesn't correct so we get to that ratio. But I think silver will be catching up more to gold and will outperform gold. It's already been outperforming a little bit, but not by the historic levels we've seen in the past.
Hey guys, quick pause. I won't take too much of your time, but if you're looking to add into your gold and silver stack, please consider Miles Franklin. More specifically, email them, info@milesfranklin.com, and tell them that Capital Cosmos sent you in the subject line to unlock special pricing that you won't find on the website. In the unlikely event that you don't like the prices, you could always not buy. There's no commitment necessary, but I do recommend Miles Franklin for a number of reasons. The customer support is top-notch, the prices are great, and I know the people there. Great people all around. So with all that said, let's get back to the video. Thanks, guys. Yeah, so from an investment standpoint, you mentioned you work with a lot of these junior mining companies, but these companies aren't for everyone. What kind of person should consider investing in the junior mining sector? And what kind of person should stay away and just maybe just stick to the physical metal, maybe just stick to some of the major names out there? What are the arts types for those two categories?
You got to have a very high pain threshold, right? And I'm saying that coming out of feels like a 13-year bear market with a little glimpses of sunshine, maybe, right? But I like to compare it to the biotech sector. If you're familiar with biotech, companies go through various stages of FDA approval. It's very similar for mining companies, junior exploration companies in particular. You drill, meaning you do your testing and research. Then you come up with initial resource that needs your first report. And you go through various stages until you come to a build decision. Very similar to biotech, actually. And those are the opportunities because each step creates value. And of course, you got to know who to invest in. Like, it's very tricky if you're from outside of the industry. That's why I recommended ETFs earlier, or mentioned ETFs. Recommend is a strong word, but mentioned ETFs. It's the simplest way to play mining stocks at this point. But if you're interested, there are a lot of companies conferences that put out online presentations from all the junior exploration companies. subscribe to a newsletter, follow some fantastic YouTube channels, and start building your own opinion because there's a lot of torque in those stocks. A lot of torque also means a lot of risk. That's why pain tolerance needs to be given. Don't invest anything that you can't afford to lose, quite honestly, because a few missed holds could mean the end of a story. Um, right now, it doesn't seem like we're in a financing drought. So, like, I don't want to get too optimistic, and I'm already quite optimistic for my taste because people that know me, I'm usually not that optimistic about this space. But it seems like companies are able to finance right now. Not euphoric numbers, don't get me wrong, but we're on track to have a decent year when it comes to financings. Why do I know that? Why do I say that? Because I run a data company that tracks all junior mining financings as well. We're lagging behind last year, and last year was really bad. But I think we're going to have a good end of the year. Flow through financings for Canadian investors, I think, are going to be quite popular by the end of the year, just to write off some tax gains. People that probably made money in the main markets will have to offset that, want to offset those. So I think flow through funding will be available to those companies. Means companies can work, companies can do create value. That's the whole point. And I think the re-rating is long overdue. It won't hit every company, and I hope it doesn't. Usually, all the tide lifts all boats, sadly. But be selective, and if you're smart and if you pick the right stocks, you can easily outperform the ETFs. But make educated guesses, right? And to inform yourself, talk to an investment advisor. Ideally, maybe a broker in Canada or so has a bit of access to some of those companies. But it is not an easy game to play. I keep saying game. It's not really a game. It's you're investing your hard-earned money. But it is not as easy as it sounds. Yes, you can make a lot of money in junior mining, but you can lose everything.
Yeah. So how do you play the quote unquote game, right? Are you more of a technical analyst? Are you more of a fundamental analyst? Walk us through like some of the decision processes that you go through to make a buy or a sell on an investment, particularly
I
in
have
this space, right?
Oh, 100%. No, so I have a bit of an unfair advantage. I've been in this space for 15 years, meaning I know a lot of people. So that's usually where I start. Like I should have started with a little black book or so and started writing names in it and maybe some notes, but I don't. A lot of it is unfortunately up here because it's really difficult to share that with others. But there's a list of people in my head at least. When I go do some due diligence on a company that I've never looked at before, for example, first thing I look at is people. As I said, like it is a bit of unfair advantage because if you never looked into a junior exploration stock and I tell you to look at the people, you won't know left from right. You won't know an apple from an orange, right? But look at the names. You can start on LinkedIn. Go on LinkedIn, check out the names, people's bios. What have they done before? And would really interesting tidbit. Are there any gaps in the LinkedIn bio? I've
Mm.
seen quite a few CEOs that try to hide um, their faults, their mistakes in the past, right? So that's an easy one. But also, like I mentioned, YouTube channels. There's a wealth of knowledge. The advantage of, or maybe one of the silver linings of the whole COVID debacle, is that there's a lot of content now available. A lot of the conferences put a lot of the content online. So check it out. Like, do you like the CEO who's presenting, or is the guy a complete prick? That's a first filter for me, quite honestly. Like, why would I invest in somebody that I don't feel comfortable even talking with, right? Um, but then, of course, I'm not a geologist, I'm not an engineer, so I got to go a bit by gut feeling. But you look at the project, maybe you need to start with a jurisdiction. Where do you feel comfortable? Do you just feel comfortable in the US, which is also tricky in itself because depending on what state you're in, it's not that straightforward, right? Canada, same thing. There's some fantastic provinces, there's some lesser provinces, and some provinces you shouldn't try even to enter right now, right? So that it's not that easy. There's a long checklist of items that you need to go through, and maybe the first one is what do you want to invest in? Gold, silver, copper. What are you looking for, right? If you want to play the trends, gold, silver, copper are probably your best bets right now. And what stage do you want to invest in? And you can find everything from grassroots exploration, a company that's never drilled a hole, maybe that has just been to the project for the very first time this summer. That means you can probably pick up a stock for 5 cents, 5 million market cap at best, and then ride it out. If you're a long-term investor, maybe you can ride the wave up to like $500 million in market cap, but that comes with dilution and a lot of luck, you know, because we're trying to drill something and find something that the drill hole diameter is like this big, and you're trying to hit massive targets with that. So, or you're trying to hit veins that are this narrow, right? It's not. My point is, it's not that simple, right? Even giving you a checklist probably won't help you much. You really have to work in it. subscribe to the newsletters, start building up a knowledge base, go to conferences. There's quite a few retail conferences. You have to immerse yourself. I think it's the same with biotech. If you don't know what kind of illness it cures, then it doesn't help.
Yeah. So you talk about subscribing to the newsletters, listening to the getting as much information as you can. You're in a very unique place. You and I were both aggregators, so we hear all of this data from these experts that we interview, and a lot of times it's disparate. It'll be this direction one day, it'll be this direction the other day. How do you synchronize all that information and kind of navigate forward?
Well, that's a very good question because it's very difficult to do. Because depending on the channel you listen to is always biased, right? In either direction, doesn't matter, even politically, or just the opinion on the gold price. I'm sure there's a few channels out there. I've yet to find them and look for them that are really negative on gold. But we try to invite guests on the channel that have that have views in either direction. Maybe somebody
just really quick and just really quick. This applies to the people watching this show too, right? It's not just us as hosts on a YouTube channel, but I see this in my comment section all the time. People are like, "Oh, well, this person said this. How? What do you make of Well, it'll be a game of hearsay. Like he said, she said, he said. Okay, well, listen. How do you what number one, how do you answer that question for yourself, and then number two, how does the average investor kind of like try to answer that question for themselves, given all the disparate amount of content out there?
Well, the lazy way is to just follow blindly some advice somebody on YouTube, you and me, give you, right? Like that's the lazy way, but you don't have to blame anybody but yourself if it fails, because that is just plain stupid. I apologize for saying that, but please don't do that. There, as I said, like there's a wealth of knowledge out there. There are a lot of smart people. My point is, at least listen to three, four, five of them, and maybe find a common denominator. Maybe you believe that gold will go up because you think, okay, the world is going to hell in a handbasket. The U.S. dollar is going to disappear. What are the alternatives? So find a narrative that sort of fits your line of thinking. Find somebody that sort of you can follow because he says, okay, this is going to happen if the dollar drops off. China renminbi is going to be the next world reserve currency. Find somebody who has the same narrative and who follows that. And then find some other opinions. If somebody says, okay, the de-dollarization is not going to happen, talk to Brent Johnson, listen to his interviews. He says, well, the dollar is the strongest currency in the world. It's not going to go away anytime soon, right? That's sort of how I would handle that. It is tricky. Don't get me wrong. Like I said it earlier, there's a wealth of knowledge and the world is moving way too fast. I said it in a previous interview. One thing I hope for next year that things slow down. Like it seems like there's a world debacle, world disaster happening daily because it's bloated up by social media, right? And that's a problem. Like it's really difficult to filter through, but try to zoom out as much as possible and build your narrative, and then find somebody who sort of covers that narrative. I mentioned de-dollarization, for example, right? But or if it's an S&P 500 crash, or maybe you believe that the AI boom is going to continue. Find somebody who is super positive on Nvidia, right? To sort of that, but make sure that there's at least a couple people that have a counter opinion and weigh those opinions. You can dismiss them, but listen to them.
Right. And then when it comes to portfolio strategies, I often see a lot of people in the resource space, they tend to over allocate and just go all in, or just go all in on one big, on not one big name, but one small name, or a very small cadre of names out there. How do you position yourself within a portfolio perspective? What are your views in terms of position sizing, time horizon, all that stuff?
I'm the worst person to ask it because I'm, as you said, over allocated in the mining space, right? Because that's where I feel I have an advantage. I should own personally more dividend yielding stocks just to put it aside, but I don't. The reason is I feel like I'm fairly close to the sector. I know what is going on. I feel like I see it on a daily basis what is going on. If I were to own a Nestle, a Johnson and Johnson, like I'm the last one to find out about big news, right? And personally, I've been I wouldn't say warning, but I've been worried about a crash in the main markets for the last 10 years. Doesn't mean I'm definitely not right on that, but I've been worried about it because we saw free money being printed after the financial crisis, and the government's intervening. I had to finance a house back in 2011, 2012, and I was like, great. That worked perfectly because the low interest rate environment. But I thought we'd be in a different world by now. We'd have seen a market crash by now, but it's been propped up by artificial money. Um, I think the number is $27 trillion that has been pumped in the US economy alone over the last 12, 13 years. So it's an unfair game, and I'm at a disadvantage. So I'm trying to create an advantage for myself by only investing in what I know and people that I know. So not sure that's the smartest answer and smartest strategy to follow, quite honestly. And every professional investment advisor probably would delete my name immediately hearing and saying that, but that's how I operate, right? And of course, then you can diversify within the mining companies. You buy some royalty companies, you buy some producers, but a lot of my portfolio is in the higher risk sector as well. I pretend that I'm still young. I probably have to rethink that one of these days, probably next week. But I think there's an opportunity to make money here, and that's why I'm invested in the space. I believe in it. I work in it, so might as well make use of it.
Totally. Well, you mentioned being concerned over a market crash over the last decade. What is your biggest concern right now when it comes to the markets, the economy, and let's just, I mean, you could even take it general as a whole. What do you see out there?
My biggest concern is that I'm still wrong for the next 10 years about it. And that we keep talking about a market crash, the S&P 500 going to overcorrect. We're going to see 41% correction, and we're not going to see it. Like I keep looking at Japan, bit of a different story, but Japan back in the 80s was a global world leader in everything. The Japanese yen was one of the world reserve currencies, one of the bigger currencies, and it's completely lost relevancy. Do I see the US going that way? Yes and no. There are various factors. Like the US has the biggest military, of course, which sort of protects the currency to a degree. But I see us kicking the can down the road extensively. And meaning I could prepare for a crash all I want, but if it doesn't happen in the next 10, 15 years, it's too late for me. So my biggest fear is actually I'm wrong about that the crash scenario or that something will correct, right? Nobody seems to be concerned about the US debt situation, $35 trillion. Nobody even talks about it. Is that concerning? Yeah, maybe, but we can just create more, raise the ceiling, and just continue printing. As long as the US dollar is hanging in there, I think we're fine. So I think that's the biggest concern I have, quite honestly, because I've been wrong about it for the last 10, 12 years.
Yeah. Well, listen. I mean, sometimes it's this the investing game or sphere. It's all about being a contrarian. So, we all try to find that one section in the economy or in the markets that no one else is talking about, and we try to exploit it because that's how you make money in this business. I want to ask you, as a result, what is your most contrarian position right now that no one else or the least amount of people out there hold?
Ooh, that's a good question. It's probably investing in like a mining stock in a jurisdiction that nobody really follows. I think I own an exploration stock that has projects in Kazakhstan. Um, I think that is probably the most controversial position I have in my portfolio. Depending on where you stand on Kazakhstan, I think they're quite neutral when it comes to the relationship with Russia. They've actually voted against the Russia in the UN Council once, or just recently, or within the last 12, 24 months. So that's after the Ukraine war broke out. So I think that's the most controversial. In terms of opinions on the main market, I'm with the doom and gloomers. I have to admit, I look at all this like free money that's still floating around, and the U.S. debt situation, the U.S. dollar, and maybe what's happening with the BRICS nations, what China is doing. I've been to Africa, see Chinese workers working on roads in exchange for resources and projects. Um, that's what I'm concerned about. That's what I'm seeing. It's not really controversial because there's quite a few of us that have that opinion, but we're not the main voices out there yet, and that'll happen. We've seen a lot of conspiracy theories turn into reality for the last 36 months here, or maybe 4 years. I'm not saying I'm a conspiracy theorist, but some of those theories, like China's taking over the world, will sadly come to fruition, right? Don't hate me in the comments, but just look at some trends. It won't happen tomorrow, folks. Like it won't. But those are some of the trends I'm seeing. Resource nationalism is a big one, for example, that nobody's really talking about. Although the U.S. government is giving out a lot of grants for that, and we've been warning about that for years. Like I remember being in rare earths back in 2009. We all knew China was the dominant market player with that like 90, 95% market dominance because they're the only ones processing it. And they've continued to do that. And now finally the world is waking up. But that is, what is that, 15 years later? Right. So on that time horizon, you got to keep thinking, okay, what are some of the bigger trends here? What is happening? where are the resources going to come from? Copper market is an interesting example since we're on that mining topic. But where is that copper supposed to come from? From the for the electrification of the world? It doesn't exist yet. It hasn't even been found yet, right? I'm sure it's in the ground somewhere, but it hasn't been found yet. That's a whole process. From discovery to mine is like 15 years, depending on where you find it. A little faster, maybe in Australia, in Chile, but you better not find a lot of copper in Canada, right? Because that's going to take forever to take out, or even in parts of the U.S. I think Resolute is still waiting for a permit in Superior, just outside of Arizona, just in Arizona, there outside of Phoenix, right? So it really depends what you're looking at. That's sort of the world I'm in, and it's kind of fun. I love being in mining because it feels like we're at the forefront of a lot of trends because we're at the beginning of everything. If it's not grown, it's mined. So we look at things very differently than a lot of the end users, let's call them that, like people that are just downstream and just looking at upstream, downstream. I always confuse the two. Downstream, they're just looking up. Okay, they're just holding the phone in their hand, but they're not involved in it. So that's the advantage we have in mining, that we have maybe a bit of foresight, rightly or wrongly, but we have a different view of the world. Maybe we're way pragmatic, which really fits my personality, maybe.
Yeah, I've got to agree with you on that take there. We are at pretty much an intersection point of multiple big trends kind of hitting us all at once. It's really kind of unprecedented. I know it's verboten to say that this time is different, but you do have a rise of an emerging power in the form of China and the BRICS, the Thucydides trap. You do have these energy wars, these materials wars, all coming to a head. You have actual wars in Europe and in the Middle East about to pop off. You have the AI race kicking off, which is heavily energy intensive, and probably plenty of other trends that I forgot to mention. But I mean, just those four or five alone, I mean, all happening at the same time. This is all a huge tailwind to the mining space, the energy complex, the commodities complex. I mean, how do people? Is this an environment that we haven't seen before when it comes to our commodity space? Do you think that we will kind of see something in the commodity space that we haven't seen before in say the mid 2000s or the 70s, or is this, or are we kind of overblowing it here a bit?
That's a very good question because I didn't live through the 70s, right? And that's the closest time period that comes to mind when we talk about like the oil crisis, for example. But it does feel like it's something new. People are looking at, I think October 22nd, the BRICS are meeting again, and some voices are already calling again for another gold-backed currency. I think that's a bit premature, but if that were to happen, that's a paradigm shift. All of a sudden, you have a new world reserve currency because anybody with a brain buys something that's gold backed, and it's not the U.S. dollar. I tell you that it's not gold backed, and it's not backed by anything really. So, you put your money into that. Would you invest in like Chinese gold backed currencies? That's a philosophical question that you have to answer yourself. But those are those trends, and they're coming to a head. Electrification, as you said, is a really, really big one, but we don't have the resources for it. So, as you said, a lot of things are happening at the same time. A lot of some topics do get overblown in social media because it is easy. Everybody's got a voice nowadays, and everybody can retweet and follow their favorite voices as well. Not sure that's the right thing because some trends like getting rid of nuclear reactors because it's on vogue in Europe is not a good trend to follow, right? And I think we're trying to reverse that. In the next 12 months, I'm sure we'll see a reversal in Germany. I wouldn't bet on it just yet, but the Green Party just took their head in Germany and said, okay, we're done. The leadership just said, okay, it's time for change. So I think it is time for change, and we're seeing it. And it could be something new. The only thing that's steady is a human psychology. That hasn't changed. So we'll always make the same mistakes. So history will repeat itself. It'll look a bit different. There are a lot of different factors, but history will repeat itself in terms of we go to religious wars. Like I don't get it. Like we live in a world where we have the world in our knowledge right here, but there will be a religious war happening. That's what we're seeing in the Middle East. We see Islam versus Judaism. Like right. So it just doesn't. We'll make the same mistakes. But there's a lot of opportunity as well. And a lot of stuff is happening at the same time. We're just in a different world. It's a digital world. CBDCs are at the forefront. All the G20 nations are looking into CBDCs. I think it was just Canada. Maybe it's just G19 now because Canada just said, hey, we might not bring a CBDC online anytime soon. But I think there's a lot of talk involved. So different times, but still the same.
So where can people find you, Kai?
Yeah, you could follow me on X. I'm the @JR Mining guy on X, or just go over to YouTube, type in SOAR financially, SOAR, not SORE. By the way, I blocked that word on YouTube in the comments, so it's gotten a bit old. I get it. It's funny when you see it the first time, but we're trying to be conservative. We don't want to be promotional on the channel, so soaring is more of a gradual increase. That's why we named it SOAR Financial. But yeah, follow us there. DMs are open on X. If you have any questions, please shoot them over. LinkedIn, just type in my name. I'm sure you'll find me.
Perfect. Well, hey guys, if you got value out of this video, please give us a like, subscribe to the channel for more content like this, and for part 2 of our interview with Kai that you can't see here on YouTube, check out our Substack, capitalcosm.substack.com, to get access to exclusive sections to all of our interviews. You get a chance to ask me questions. You get a chance to recommend me future guests on the show and so much more. Check out our link down below in the description box as well as the pinned comment. And with all that said, thank you so much for watching. We appreciate your time, and I'll catch you in the next episode. Bye, y'all. What are some use cases that would prove our thesis wrong? In what way, how could we end up being wrong in all of this? How could we end up not seeing a big boom in resource stocks and all that other stuff?
The world makes up, meaning we see world peace. The U.S. turns the boat around and the economy's fine. Unemployment drops again. The U.S. manages to figure out a solution to the debt problem that doesn't hurt anybody. Yeah, I think we just need a miracle. Maybe some rainbow farting unicorns, right? Like, I hate to say it, I have to be like jovial here, but it is tough. Like, I don't see any bullish cases. What do you call it? Like, it's positive notes. Like, I don't want to be doom and gloom. Like, I really don't want to be, but everything I see right now points in that direction.